Yo, 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 welcome to Froggy Stocks. Nothing I say is financial advice, entertainment purposes only. Who bought the dip with me? Couldn't have called it any better. It was amazing. We went sub, let's go to Hycroft first. We went sub 150 early in the morning, hit a buck 43. I bought in at a buck 44. I personally think that's the last time we're going to see that low of a price on Hycroft. Notice we hit a buck 60 and came back down. The lowest strike price with the highest open interest on the call side was $1.50. I will be very, very, very surprised if we finish above a buck 50 today. No, I'm not saying to sell. What I'm saying is the market makers need to drop it down to steal those premiums. But the problem is we had a catalyst pop up in between. BBIG came out and said they're going to do a type of crypto dividend to their shareholders. Sounds really familiar, almost like the STO dividend, NFT dividend we were talking about with Terrible and Alder Lane Eggs, Mark Cahotis 4 months ago, that the entire community decided to harass us over for 6 months. Now, Adam Aaron said was illegal, and it's obviously not. So that catalyst is forcing a downtrend in the market on a lot of stocks held long by market makers like Citadel and whatnot. Netflix is in the gutter. Facebook's in the gutter today. It's really good for us. That means there's some liquidations going on. Now, if they lost their grasp on the $1.50 strike on Hycroft, that looks really, really good for us for the next 2 weeks. Like I said, my dip buy theory is to buy the dip below the lowest strike with the highest open interest, which has worked for 2 or 3 weeks in no options May, which is having a profound effect on the market. The next 2 weeks, the strikes or the next week, the 13th, the call options chain, the HYMC options chain is pretty lean. I'm not looking for anything specific next week besides another dip buy under 150. That's all I'm looking for. May 20th, there is a massive open interest on the options chain for the calls, out to $2.50, which is over 20,000 on the open interest. Let's see, May 20th, 26,990 on the call options for 250. But look at this, it's only 90 volume. This is probably market makers loading this up right here. The lowest open interest on the lowest strike on the highest open interest is $1. I do not see them pushing it below $1. The company has more cash on hand than $1 per share currently right now, plus its assets. So that would make no sense if this dropped sub $1 while it has $175 million on the books. Definitely not below 150. I think if anything, we're going to break $2. We're going to bounce between 2 and 250. If something happens and we break 250 and these calls land in the money, we are going for a mega ride on this stock. So pray for the break above 250 on May 20th. Hopefully the market conditions favor us and everything lines up. And then obviously, as you can see, May 27th, there's nothing. There's hardly anything, not even out from $4 down to 50 cents. That's really, really good. The point is, people need to stop buying weekly call options. It's a freaking gambling casino lottery ticket, man. Everybody's been getting their eyes ripped out on premium thefts. So that's looking really good. AMC is looking good too. We dropped below $15, which is what I said we would do. I bought the dip down here from like little 14.10. I wish I could have got the 13.52, but you cannot. You can't predict that specifically perfectly. But I did get in lower down there. We ran back up above 14. Let's see. We hit 14 above 14.50, which is really good. And now we're bouncing around. AMC is a little bit of a different story because the market makers can go and create FTDs, short sell, and then go short the IWM and then cover, and they can bounce it back and forth. They can't do that with Hycroft. So anyways, with BBIG cooking, with their new news, their 40% run, congratulations. GME getting ready to do the dividend split. Multiverse of Madness was a sold out show in my theater, and it was good. It was like non-original Avengers style. Classic horror throwback with new age possession movie type qualities. but you had the Marvel Universe superpower feel to it too. I loved it. I absolutely loved it. It was mind-bending at every turn, and I'm going to go see it again because I'm sure I missed about a billion things in the movie. I thought for a minute I saw Loki in the background. That's all I'm going to say. But on this, earnings for AMC, we have that on the 9th. Hopefully Adam Aaron drops some good freaking news, some aggressive news, man. We need some aggressive catalyst on AMC to get it back up above that $16 range. But we should check the AMC options chain. I think the 20th is leaning kind of towards the same way that Hycroft was. It's very important. I've predicted perfect buys and highs on this process for the last 3 weeks, and I will toot my own horn because there's a lot of people following me that made some freaking good money off of this, and I'm happy for you. All right, we got May 6th. Let's see, May 13th. Not much going on the May 13th options chain. Let's go back a day. Probably 14.15 has more. Yep, 14.15, $15 has that's the lowest strike with the highest open interest. So they don't want us above 15 next week, but we do have some good calls on 20. So if they can't keep it suppressed below this entire run right here, $20 to $15 is such an important range because the average short, I think my buddy Swing put out was somewhere around like 20 some dollars or whatnot, 20 to 24 bucks. So if we break 20 bucks, the game's over, man. They're going to get crushed. But when you look and we check the May 20th options chain, not much going on until 20 bucks. 8,420 open interest at $20, which is the lowest strike with the highest open interest. And then we go up further, we got 69 at 25, but then it gets really dicey up in here. 12,631 at 30, 8,000 at 40, 24,000 at 50, and 21,000 at 60. Now here's the deal. They are either institutions that have jumped in, they're out of the money, deep out of the money calls people have placed in the past, or it's institutions jumping in those calls knowing that the market makers are in trouble, that the hedge funds are in trouble, and they foresee this run happening up to these prices. Now, I'm going to be realistic and say I'm looking at $20 for AMC on May 20th. If it breaks that and we close above $20 on the expiration date, we're going for a freaking ride, man. It's all lined up. And if you look at the charts back at this time last year, we had a nice run right here on May 14th. Everybody remembers that pop. Then it dropped back down, and then we went for the 72 run in June, right? Well, let's see here. March 31st, we had that big run, draw back down, and we're getting in through mid-May now, getting ready to go into June. So there's that valley off that big run coming up right into June. It just looks so familiar, you guys. So I've loaded up. You guys saw my dip buys. I post my trades on Twitter at tspencer322. Man, I hope you guys all made some money off of this stuff going forward. Now, keep in mind, all my predictions that I've made on this, which I don't even normally do, are based on the options chain, the lowest strike with the highest open interest to buy your dips, and then ride out your rips. But I am not accounting for any squeezes. I'm not accounting for any hedge fund covering or any unknown catalysts. So if you have a huge catalyst pop up tomorrow, Monday, or even today, say at the end of the day today, Adam Aaron comes out and says, oh man, Hycroft just found a gold nugget the size of the moon. And Hycroft squeezes and AMC squeezes. They're obviously going to blow through those strike prices and the calls will land in the money. But currently, I'm playing off the market makers' greed and corruption to identify when the appropriate time to buy dips are and when our runs are going to be. And it's been successful so far. So I'm in, man. I'm in. Diane Garrett is a complete boss. She just radiates confidence. She's smart, intelligent, and she is front and center on the stage every week with a video or some kind of tweet. What you're looking for in Hycroft is the announcement of their mill being set up into production the technical study done and the mill being set up in production, and the POX processing plant technical study done and being set up for production. Because once those are ready to go, they will reinitiate full run-of-mill mining operations, most likely at their new high-grade sites. They're going to start pumping a bunch of ore over to the milling plant, crush it down, POX pressurization process, and now they're going to be delivering gold and silver from their remaining leach pad stuff and gold and silver from their new, more efficient, lower cost POX, high pressurization oxidation process. So for a couple quarters, they should be producing, say, 1 quarter on a leach pad alone. Last year, they produced over 12,000 ounces of gold. With both systems running, I'm assuming they can get that up to about 20,000 ounces of gold a quarter if everything's running nominal and they have the good ore. Silver, same thing. I'm in. I think we're getting ready to go for a ride. I think May and June is setting up just like it did in the past. Citadel's in trouble. Melvin's out of business. Archegos is out of business, and they got the rat, Bill Wang, ready to squeal, ready to roll on everybody. Everything is in our favor. Don't get punked out of your position. And I'm telling you guys, if you want to keep feeding Citadel and Susquehanna and Virtue and Morgan, these market makers, if you want to keep feeding them money, keep buying your options. Every options play you buy right now generates liquidity for these funds. And I'll tell you, no options May is working, because on AMC and HYMC alone, there's been people posting about how, oh, the retail apes went home because they're bankrupt and the casino's over because the options chain is looking lean. That's not that. They had no idea. They're out of touch. They don't know that we did no options May. No options drains all the liquidity market makers and brokers make from PFOF, and then there's no incentive for them to do it anymore. Just like stuff like this. If you're still purchasing things from Amazon, you're helping fund liquidity to Citadel. Amazon and Citadel come in together and wreck businesses, man. That's what they were trying to do. That's why Amazon bought MGM Studios, and that's why Citadel came in and blasted AMC into the dirt with the short selling so Amazon could come in and buy it out. That's why you heard all the Amazon buyout rumors. You got to boycott the products that Citadel and these big corrupt hedge funds hold long on their books. Amazon, Facebook, Snapchat. Now, in a past video, I said Coca-Cola. I'm going to retract that, because AMC Theaters does sell a lot of Coca-Cola. Buy the product, but only buy it in AMC Theaters. But these other things, man, Netflix, Amazon, all these other services, cancel that shit. Boycott it. Take that liquidity away from them. And like Inspector Bigham says, man, get your money out of any big bank that is ISDA certified. They're using your cash in your account to have proof of liquidity. They're using it to meet their margin requirements. Go to a local credit union. Anyways, if I see anything new, I'll make another video. Hopefully we see HYMC try to break positive today. If it does, I will be very, very happy for the next 2 weeks. So y'all have a good weekend, man. Stay safe. Go see Multiverse of Madness. It is absolutely amazing. You will love it. It's different from the beat 'em up Avengers movies that we've all seen and we're all getting a little tired of. Lots of classic horror references, lots of new age horror references, and super, super, super good character development. So just if you take your kids, there's a couple times where it gets, if you got kids 12 and under, it gets a little violent. It gets a little gory. So just be careful if you're taking your kids, man. You're the parents, you know what's best for them. Anyways, y'all have a good weekend, man. Froggy Stonks out.